you will see Bitcoin panic and see sellers bring it down there as well. You will have essentially a crisis there. So that is really the only way I see Bitcoin revisiting the 15.7. The problem is, I actually believe that that's going to happen.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
There's so much crap out there, guys. I mean, I'm on Twitter. I see the junk people are posting, the nonsense. I watch mainstream media, the crap that they're posting. And honestly, we need a place where we can get live information that is, again, about the data and the charts. All right. Without further delay, let's get right into it. So let's start with yesterday. The Federal Reserve, obviously, we know on Wednesday raised 25 basis points. In general, they were somewhat on the little bit more dovish side, talking about how there's a lag in monetary policy, which means overall they're aware that the rate hikes, and this is important, guys, rate hikes that they're doing now will take 6 to 12 months to be factored or impact the economy. So really, if you go back 12 months, think about this. Where were interest rates 12 months ago? They were way lower. We're talking like 2%, 2.5%. So you're talking about all of that movement to 5.25 to 5.5 that still is not impacting the economy. The Fed is saying they're aware of that now, which is good to see if you're for the economy, for job growth, for stability. All right, so let's take a look at this chart over here because yesterday we saw, that we had this big decline on the 10-minute chart of the S&P 500 yesterday, right? So again, this was a big drop. Initially, the markets were gapping up because we saw the Federal Reserve a little bit more dovish. We had Meta earnings out there. And then all of a sudden, number one, look at where we were, trend line. Let me show you this, guys. This is pretty crazy stuff. Go to your daily chart. Look at where we opened on the day. This is why charts blow my mind. This is why charts get me so freaking excited after 25 years of doing this, is because you still open up there, everything looks rosy. Fed is dovish, Meta earnings were showing great results. In general, we saw Google earnings were good. Markets still open up on that trend line and get crushed. That's charts for you. Now, what the heck was going on here? Well, interestingly enough, when the Fed is a little bit more dovish, the dollar should decline, okay, and yields should go down. We'll take a look at what yields did here. And let's go to the dollar, okay? So the dollar on the daily chart yesterday, was actually rallying. Initially, it was weak, and then it had a big green candle to the upside. The 10-year yield, let's take a look at the 10-year yield here. The 10-year yield, interestingly enough, had a big up day yesterday. So as this is happening, I'm like, and this is live. I mean, like, I'm on the live day trading room with In the Money Stocks members. We're trading charts, we're making money here and there. And I'm like, this doesn't make sense. Markets are opening up here, but the dollar's rallying and yields are rallying. So what the heck is going on? All of a sudden, the markets begin to reverse. Now, again, it comes right off of the trend line. But why the heck did we sell off? And the answer is this. There was a rumor that ultimately panned out to be semi-true, that the Bank of Japan was going to cease their yield curve control. What's YCC? You're going to hear that a lot. YCC, yield curve control. Now, the YCC basically means this. It means that Japan for decades has basically pegged their interest rate to zero. And that's been fine because they've had no inflation. In fact, they've been in deflation for a large chunk of that. So they don't need to raise interest rates. Well, guess what? The inflation bug is hitting Japan now, and it's hitting it hard. So all of a sudden, they're saying, okay, we can't control this. We have to let interest rates go up. So the rumor was they were going to cease control, let interest rates float up, and then all of a sudden that screws with the whole yen carry trade, all of this stuff. Everything our financial system is based on with Japan and the inner workings of all the economies goes haywire. So the markets collapsed into the end of the day. Now, this is very interesting here. We got the Japanese central bank came out about midnight last night, East Coast time, and said, yes, we are going to let a little bit more interest rates float, but only to 1%. So again, here we are where, okay, that's fine and dandy, but now we've had a little rally back because it's not letting all hell break loose with the Japanese central bank letting interest rates for their economy float willy-nilly. It's that they're doing it very gradually. And that again is giving confidence that the yen carry trade is okay, that other things are okay, that it's not going to go haywire here. So we see the futures up about $3 today on the spiders. Morning, we got inflation data on the PCE. The PCE is one of the favorite gauges for the central bank. Okay, so the PCE, US inflation eases again. PCE shows prices rise at a slowest pace in almost 2 years. Basically, the numbers came in as expected. Now remember, the CPI data in 2-3 weeks ago came in better than expected. This came in where expectations were. Now my problem with this, and why I'm gonna poke a little bit of a hole in this, is that this is June numbers, right? So June. Now, why is that a problem? Why is it a problem that we're looking at June numbers? Well, because frankly, it's almost August, meaning we're gonna get July CPI in just about 2 weeks from now. And if we go to July, I wanna show you guys this. Look at oil, okay? Look at oil here. All right, look at the move. Oil at the beginning of July, and I've talked about this in past streams, but it's important. Oil was trading at 67 bucks. It's at $80 right now. That's a move up of $13, almost about basically 15 to 20% just in the month of July. Now, this is the caveat, and this is what I think is very interesting about the economic situation we're in. If we don't go into a recession, right? So let's just say the Fed is right. The Fed is right, no recession. What's going to happen? Demand for oil is going to go up. Demand for gasoline is going to go up. The economy is going to reaccelerate. In theory, Europe should start to do better. China should start to do better. That's increasing the demand. What is that going to do to inflation? It's going to drive it up. Can the Federal Reserve lower interest rates in that environment? No, they might even have to raise interest rates. Now let's take it from the other point. Let's just say, okay, so we slide into a recession. Demand for these commodities goes down. Okay, so good. Then at least inflation comes down, but the economy goes down. We're going to take a look at crypto. Let's take a look at crypto here. Going into this chart here, we have Bitcoin continuing, and I'm going to go over some other cryptos because I have some other levels for you. But basically, look at this pattern. 1, 2, 3, 4, inside bar, lower level. Let's talk bear flags, okay? Bear flags occur when you get a sharp move down and you get in the lower, especially the lower 25% of that candle, you get sideways movement, a right angle. A perfect bear flag is a 90-degree angle. What we call an in spirit of bear flag is 90 to 45 degrees. So it could be upsloping ever so slightly, a 45-degree angle. It would still be bearish. Anything less, if you go like that, not that bearish, not worth a trade. This is a bear flag. This means that probabilities are favoring at some point another drop. You'll have support around 28,500. That's coming from, now you can't see it on this chart. Let me zoom out a little bit here. That's coming from, let me see, oh yeah, right here. This pivot high right here, that'll be some support. My big level remains 27,000 right now. It is an upsloping trend line, so in a week it's probably gonna be 27,200. That's fine. Upsloping trend lines go up, so you have to go with it. That's the level. That is what it is. As I've said to you guys a million times over, as long as this line holds, then crypto honestly is okay. It's in a safe zone. If this line here breaks, that's where you have to start being concerned. You could start breaking here, here, and maybe even retesting the lows. My base case, and again, everyone always asks me, what do you think about, Bitcoin getting to 12 to 13,000 or even the lows of 15 or maybe even where your worst case was 9 to 10,000? And I say this, the only way Bitcoin goes down to 15.7 or down to even lower is if you have a credit or liquidity crisis. And I'm not talking about in crypto. Crypto already has a liquidity crisis. Ask anyone trying to trade altcoins or NFTs. There's no liquidity. What I'm talking about is in the stock market. If you got the NASDAQ or the S&P to fall back to the October lows, and I'm talking October 2022, so we're talking 20, 25% down, you will see Bitcoin panic and see sellers bring it down there as well. You will have essentially a crisis there. So that is really the only way I see Bitcoin revisiting the 15.7. The problem is, I actually believe that that's going to happen. All right, more and more data showing us, inverted, whether it's inverted yield curve or this or that or everything else. As much as the Fed wants to say, and I talked about this yesterday, guys, Jerome Powell comes out and says we're not predicting a recession. I literally go back to 2008 in January, I think it was, of 2008, and Ben Bernanke's like, we don't think we're going to have a recession. I'm like, okay, this is a confidence builder. So, and this is the thing, is like, everyone has to remember, these are academics. They basically have feelings, they're human. They don't want a recession, they want a soft landing. They want to be heroes. They want to redeem themselves from calling inflation transitory when we ultimately found out it wasn't. But human psychology means that we tend to repeat our errors. And by the way, I repeat my errors too, unfortunately. I try to learn from them, but we all repeat them. And this is, again, something you have to be aware of. Ben Bernanke said it in 2008, and here we have a new Fed chair, Jerome Powell, saying it again.